Well, thanks so much for joining us today. I'm Marlin Bohling with you. Are we holding on to the gains that we had early in the day in the corn and soybeans? Well, let's take a look. Now, in case you missed it earlier, we had an overnight export sale announced by USDA this morning. And technically, it'd be over the weekend, but it was a pretty big amount this time. It was soybeans, and they were sold to the unknown destination category. It was 507,000 tons. And definitely something that will help to support the market here this week, we hope anyway. Let's take a look at what's going on in the futures trade. Starting with the corn, our quotes are provided by bar chart, and the corn has been trading higher today. We have March now 8 3/4 higher. We're at 629 1/4. December up 4.5 cents as we speak right now. Moving on to soybeans, well, they are definitely benefiting from that news. Of course, they were higher overnight to begin with. March beans 23 1/4 higher. Last trade 15.77 now. They had been as high as 15.86 1/2, so they backed off a little bit here, about 9.5 cents off of their earlier high. Meanwhile, it's interesting in the wheat market. It has been chopping around, kind of flirting with unchanged today. March wheat in Chicago now 3/4 higher at 7.64. It had been a few pennies lower there for a little bit. In the Kansas City trade, you have the March contract now a penny lower at 7.84 3/4. However, you go into the deferred months, and we're actually 1 to 2 cents higher if you go out there a ways. And on Minneapolis wheat, you have the March contract 2 1/4 higher at 9.15 1/4 per bushel. And let's check out what's going on with the cotton market here today. We have March trading 72 points lower, still up there at 126.02 per pound right now. Well, we are joined in studio, in person, by Chris Swift of Swift Trading. He is based right here in Nashville. Always a treat to get to visit with him in person here, and good morning to you.
Good morning.
Happy Monday.
Thank you, same to you.
So soybeans on a tear again.
Absolutely.
How long can they do this?
For a long time.
Really?
It's incredible. As long as you continue with livestock production and you need the edible oils that are competing heavily with the palm oil, it could continue to move higher. Seemingly everybody is behind the 8 ball in catching up with the inflationary aspects. Inflationary aspect is if I don't buy it today, it's just going to be higher tomorrow. And with no price breaks in there, and you're running out of cyclical production needs, you got to replenish those.
What about on corn? There's so much talk, and we do have a WASDE report coming up later on Wednesday. So what about the corn and its competition with soybeans and cotton and, gosh, now even maybe spring wheat in the north? How is corn faring when it comes to bidding up for acres right now?
I don't know. I don't think anybody knows. I mean, if we look at and the input costs continue to rise, we continue to see energy prices rise. So I'm not real sure how gamey anybody's going to be willing to price their crop with the unknown of the input costs still very much unknown.
Speaking of energy, I wanted to take a look at crude oil trade, and let's go ahead and bring that up on the screen here. The West Texas Intermediate crude, interestingly, has March trading $1.17 lower, now $1.19 lower, and we're at 91.12. That's off of its earlier high from last night by over $1.50 right now. Is that adding a little bit of pressure, do you think, on the corn here this morning?
It could be. You know, these are new contract highs in most of the crude oil, and I did notice that both gasoline and diesel fuel were new contract highs again today. So ethanol being an energy, corn is 40% energy. So the ethanol production on there has been relatively high, and it should stay that way with the kind of demand that we've got.
On the other hand, soybean oil, you just referred to the soy components here. Soybean oil is higher today, so it's not having any impact on that at all. March is up 27 points at 65.63 a hundredweight. Well, we'll come back and we'll talk with Chris about our livestock trade. He's well versed in that, of course, and we'll discuss when we come back. Well, we're back with Chris Swift of Swift Trading, and let's talk a little livestock market action right now. First, let's go to live cattle. And on the big board today, Chris, we're just a little bit weaker, but I mean just a little bit. For example, April live cattle, only 1 tick lower, 2.5 cents lower. We're at 146.85. June, down a dime. We're at 141.27 right now. Let's go on to our feeder cattle market. And so far this morning, on the feeder board, March is trading 90 cents lower. We're at 165.20. Biggest mover to the downside would be your April. It's down $1.12 at 170.30 per hundredweight. And on the lean hog market here this morning, you have February 97 higher. And look at April go. It's up $1.20 at 101.27, still about a $0.50 off of its earlier high from this morning. But strength in hogs, cattle market just kind of treading water. Why do you think that is here today?
You know, I think a lot of it's just basis trading more than anything. As we discussed earlier, the futures markets are now anticipating a lot of this inflation that we're in. And once they reach a level, then it's all up to the cash market to either continue to push up to those levels that the futures are presenting, or the futures market will come back down to the levels where the cash are. So I think right now it's more basis trading. I want to own it out in the future right now until I see what the future is. And if the future meets the expectations of what the market has, and everybody's great. If it doesn't, then they start to sell the futures off.
Now, back to your earlier point where you thought, for example, soybeans and the feed grains may have a lot of room to run.
Right. That
would be kind of scary, wouldn't it? If you were a livestock producer,
what
do you do about that?
Absolutely, it would be. Well, you know, Scott has made some really good points over the last week about using options. And Chris and I, my partner, have come up to say, you know, let's start using more options here because we just really don't know. And I don't think anybody does. And earlier we discussed about the acres and what crop is going to outbid the other one for the acres and what input costs are going to be the determining factor to the farmer as to which one he plants. So we're still probably 60 days away from knowing any of that information yet.
And there's a lot more strategy that could be explored other than just using what they call naked options.
Oh,
correct?
Absolutely. You know, get with your broker and learn some marketing strategies. Even with your elevator can help you with some marketing strategies because we've already seen immense price expanse. I think it would be silly to not expect even more price expanse.
Well, good advice. Thank you for coming in.
Absolutely.
Always a pleasure to visit with you.
Same
Chris
here.
Swift of Swift Trading in Nashville. Janet, back to you.